Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from mpiinvest.com. Well, if you look at the stock market yesterday, just as we discussed, HDFC Bank was in focus, and as the results came, the market of course, opened with a small gap up, but then from there, after the HDFC Bank results came, it just shot up and set a brand new record. In fact, Nifty not touched, closed above 19,700 officially, breaking out from the 19,500 600 zone. So on the higher side, of course, the resistance has been broken, and markets are looking super positive, all thanks to HDFC Bank. So this is exactly why we discussed yesterday that HDFC Bank can play an important role. And as we were expecting, as discussed yesterday in the podcast, the results were of course good, and that helped markets close higher. But if you look at a European market, they closed lower yesterday because if you look at China, we had spoken about this in yesterday morning podcast that the GDP has actually come down. So that was a negative because when a Chinese GDP has come down, that means the energy consumption or crude oil consumption can go down slightly. And when that happens, European markets can get into trouble because there are a lot of oil marketing companies there, like Shell and all these companies. So basically, that kind of brought the European markets down. But that did not deter the US market. US market actually went up yesterday. And naturally, it should happen because today major banks are reporting the results in the US. And because of which we could see a short covering rally in the banking sector. And that led to some rise in the US. But not a big rise, but still it was a decent rise. Nasdaq was also up by almost 1%. So with all this, US markets closed in the green. And Indian markets are already super bullish. So with the US markets closing in the green, the Nifty futures are already indicating a gap up opening. So we would see another gap up opening today. So where is the end to the rise? Nobody knows. But then, of course, the markets are super bullish. So, that, and like I've been telling, it's been a really long rally in the Indian stock market. So this is why many times if we think that tomorrow or day after tomorrow the market will fall, it may not sometimes. And many times those who go against the trend get stuck. So at this point of time, nobody has a view on where is the top, where is that reversal. But of course, the markets will correct sometime. And when that correction happens, without a correction when the markets are going up, the correction that happens can be a faster and furious one. So that also can be expected at any point of time. So on a risk reward point of view, like I've told you earlier also, doesn't look great to get in full on. But then of course, long-term investors can continue. Apart from that, yesterday, interestingly, you could see the DII and FII both have bought for just less than 100 crores. So that means the retailers have taken the market up yesterday. So, or the big short covering rally in the major banks. Because if you look at all the top players, all the top gainers yesterday, everything were from the banking sector. So that was, of course, a great sign. But then today we need to be careful because today is the Fin Nifty expiry, and that could lead to more volatility and big movements. So that should be taken care of. Let's see how the market reacts to Fin Nifty expiry. And based on that, we can plan for this week expiry. So that's it for now. Being a Tuesday, making it slightly early and a short one. So we'll discuss more in detail tomorrow morning on the podcast. So that's it for now. This is Srikanth. I'm signing off. But before we leave, of course, do remember to press the like button if you love the content that we share. And then do share the podcast with friends and relatives to help them learn and invest together with us. Goodbye.